All right, let's talk about what's going on in the markets today, because honestly, it feels like they're being pulled into completely different directions. You've got these escalating geopolitical tensions on one hand, but then on the other, a market that's rallying like crazy and some really strong economic numbers coming out of India. So how do we make sense of it all? Let's dive in and try to decode these signals.
So, let's kick things off with the big one, the main story that's got everyone on edge, the geopolitical tightrope. We're talking about those conflicting signals coming out of the US and Iran. This is really the heart of the uncertainty right now.
And this really gets to the heart of the matter, doesn't it? Peace talks or blockade? What's guiding the market? I mean, what's the market actually listening to? Is it the sound of military pressure building up, or is it the whispers of peace talks and a resolution? These two narratives are in a complete tug-of-war.
And this slide just lays it out perfectly. It really is a tale of two narratives. On one side of the coin, you have the pressure mounting. We're getting confirmation from U.S. Central Command that a full naval blockade on Iranian ports is a go. I mean, they've already turned back 9 ships in the last couple of days. That's real, tangible action. But then you flip to the other side, and the headlines are all about peace hopes. You've got President Trump saying the war is close to over, and the White House is calling the negotiations productive. So you can see why the market is just stuck in the middle, trying to figure out which story to believe.
Now, what's adding another layer to this is the timing. It's all about this ceasefire countdown. The official agreement, well, that ends on April 22nd. That's coming up fast. But here's the kicker. Reports are suggesting that, behind the scenes, an informal 2-week extension has pretty much been agreed upon. And that, right there, is the safety net. It's the reason the markets aren't completely panicking. It gives everyone a little bit more breathing room.
So, given all that drama, that back and forth, you'd think Wall Street would be a nervous wreck, right? Well, let's take a look at Wall Street's upward surge and see how the U.S. markets are actually reacting, because the story here is kind of the opposite of what you might expect.
And here's your answer, a massive plus 1.6%. That was the NASDAQ surge in just the last session. It's pretty clear which narrative the market is buying into. It's laser-focused on the positive news, on the possibility of peace.
And this chart gives us the bigger picture. You can see the NASDAQ leading the pack with that huge 1.6% gain. The S&P 500 also did really well, up 0.8%, and get this, it hit a fresh all-time high. The Dow was the laggard, down just a tiny bit. But the big story here is the sheer strength, especially in tech. Investors are clearly betting on a good outcome.
And look, this isn't just a one-day wonder. This is a powerful, powerful trend. The NASDAQ is up a whopping 14% in just the last 10 sessions. That's its strongest rally since 2021. And it's all being driven by this combination of, 1, the expectation that peace is coming, and 2, some really solid earnings from tech companies. You know, tech is often seen as being a bit more sheltered from physical trade problems, so that might be part of its appeal right now too.
And here's another piece of the puzzle that's keeping the market happy. Let's do a quick commodity check. WTI crude is sitting around $91 a barrel, Brent is at 95. The key takeaway? Both are staying comfortably below that big psychological $100 mark. For a world that's constantly worried about inflation, this is a huge sigh of relief.
Okay, so that's the global picture. Let's pivot now and bring this story back home to India for an economic checkup. We're going to look at some strong fundamentals and some interesting shifts in money flows, because we just got some really important data.
So fresh off the press yesterday evening, we got India's trade numbers for March. And honestly, it's looking pretty healthy. Exports were solid at $74 billion. And interestingly, imports actually dipped a little bit. This is the kind of strong, fundamental picture the market absolutely loves to see.
So, what does that mean when you put it all together? It means our trade deficit for March was just $2.5 billion. That is incredibly narrow. It's a really strong signal for the health of the economy, and it could be a big help in keeping the rupee stable.
And on top of that good news, we saw a really positive shift in sentiment from foreign investors. The FIIs, the foreign institutional investors, who've been selling for a little while now, actually turned into net buyers yesterday. They picked up about 650 crores worth of shares. Now, it's not a gigantic number, but the important thing is that they stopped selling. That's a huge confidence booster for the market.
All right, so we've got the global picture, we've got the strong Indian fundamentals. Now let's put on our trader hats and decode the market charts. What does all this mean in terms of actual numbers? Here are the key levels everyone is going to be watching for the Nifty and the Bank Nifty.
This table really lays out the battlefield for today.
For the Nifty, that big hurdle, the crucial resistance it needs to break through, is in that 24,250 to 24,300 zone. And for the Bank Nifty, the ceiling to watch is right around 56,700 to 56,800. If we can get a strong, decisive push above these levels, well, that could really kick off the next leg of this rally.
So what's next? What should be on our radar for the rest of the day? Let's talk about what to watch now, because there are a few key events on the horizon that could definitely move the market. Okay, it's a busy day. First up, here in India, we've got some big earnings reports coming out from companies like Wipro and HDFC Life. Super important to watch. Also, don't forget, today is the Sensex weekly expiry, and that can always inject a bit of extra volatility into the mix. And before our market even opens, keep an eye out for China's GDP numbers. Why? Because China is the world's biggest metals consumer, so that data can have a direct impact on our metal stocks. Then later, we'll get data from the UK, Europe, and the US, a lot to keep track of.
You know, I think this quote just perfectly sums up the mood right now. The market is not reacting to the current situation, it is reacting to the expectation that things will improve. It's so true. It's not about the naval blockade that's happening right now, it's about the belief that peace is just around the corner. The market is always trying to look ahead, and at this moment it's pricing in a much brighter future.
And that really brings us to the final big question for today. With the markets pricing in so much good news, so much hope for peace, is this current way of optimism really sustainable? Is the market getting a little bit ahead of itself? It's something we all need to keep in the back of our minds as we move forward.
It's a really important question, and you can bet we'll be tracking it closely right here. If you want to stay on top of these developments with us, please do consider subscribing for more explainers just like this one. And as always, just a quick reminder that I'm not a SEBI registered advisor. All this content is purely for educational purposes. Thanks so much for tuning in.